Hey, Bulls and Bears, what is happening? It is May 1st, 2023, back with another economic dose, a dose of economic reality. I almost forgot. What a day. So, JP Morgan to the rescue, rescuing First Republic Bank. Is it a good thing? Well, it's not. And it's just like we said was going to happen. There's going to be consolidation. The big mega banks are going to be gobbling up, for lack of a better term, gobbling up a lot of these local and regional banks. First Republic, it was a very big bank. It was I believe, the 14th largest bank in the U.S., but it still was considered a regional bank. And when you have big banks, and just in general, when you have big businesses gobbling up smaller businesses, it's typically not good because that's less options for the consumer. Now, will this rescue, JP Morgan Chase to the rescue, will this solve the crisis? No, actually, JP Morgan is one of the most systemically risky banks in the entire banking industry. We talked maybe 3 or 4 weeks ago about the derivative debt of JP Morgan and these other mega banks. We're talking tens of trillions of dollars. Go back to that previous report. The derivative debt out there for some of these big mega banks is actually bigger than the national debt of the United States. That's how leveraged these banks are. You see, once you introduce money that can be created out of thin air, what we call fiat currency, once you introduce that type of currency, that's what happens. You have this debt on top of debt, leverage on top of leverage, and now it's in the trillions of dollars. And it's not just me saying that. That's studies that came out, reports that came out. See, this is all being papered over. And no, this is not going to fix the banking crisis. All the banks, including JP Morgan, they don't have the money. So if everybody goes out, if everybody panics, if enough people panic, not even everybody, if enough people panic at once and take their money out, which I think is we're still going to see more panic in the banking system. If enough people do that at once, all these banks are insolvent. They all engage in a similar type of lending system, and that is what's known as fractional. They have a little money in deposits. They loan out thousands of times more than the little bit they have in deposits. It's called leverage, and it's known as a fractional system of lending. And the banks hope that people don't get scared or find out what's happening, because then people will want to go get their money because they know that the money's actually not there. It's kind of like musical chairs. You know, you're walking around, you try to get the chair. There's going to be some people left out. So if everybody starts getting their money out at once and grabbing those chairs, there's going to be some people left standing without a chair to sit in. And those are the people that are going to have to either, one, just lose their money, or two, they're going to have to get rescued, or just like we saw with Silicon Valley Bank, they're going to have to get some sort of injection and just new debt just pushed into the system because the FDIC doesn't have enough money to cover all these deposits. In fact, they have just a small fraction available for bank runs. So it's not good. The entire system is basically insolvent. Now, before we continue, we've got a lot of big news to get into today. Pretty important news. Let's hear a word from our sponsor. And this is Sound Money, so listen carefully and consider, what we're talking about here with the sponsor. And then on the other side, we've got some other important news to reach out to you. There's no denying it. Gold is hot right now. Prices are soaring, and experts are predicting even more to come. Not so long ago, gold reached its all-time high of $2,069 per ounce, and now it's inching even closer to that number again. Bank of America, one of the largest banks in the world, is saying that gold will rise further still to over $2,200 an ounce later this year. So what, right? Well, gold is already a safety net for your hard-earned money. And now, when the stock market is all over the place and the value of the dollar is uncertain, being safe counts like never before. Noble Gold is offering a free 5-ounce America the Beautiful coin for any qualified IRA or 401k rollover. Terms apply. A solid silver U.S. Mint issued coin celebrating our national parks, free with every qualifying precious metals 401k or IRA rollover. You can't go wrong with Noble Gold investments. Call 877-646-5347 or go to bullboomgold.com. That's bullboomgold.com, link down in the description of this video. All right, so with all of this insanity that went on today, all this monetary madness, we've got the talking heads out there telling us how safe and sound everything is. We've got Jamie Dimon out there, the JP Morgan CEO, the system, quote, the system is very safe and sound, unquote. We also have other individuals out there telling us how safe and sound everything is. So why are they going out of their way to tell us how safe and sound everything is? Now, in other news, to underpin how safe and sound the banking system is, we've got Morgan Stanley out there saying there's going to be 3,000 job cuts here just in the second quarter. 3,000 job cuts, folks. If the banking system was that safe and sound, why would we see so many layoffs happening with the banks? Why are we seeing banks fail? Do you think it's just a few of those banks, just the 2 or 3 banks that we've seen fail so far? You think it's just those banks that are over leveraged and have given out too many loans? You don't think that all the other banks are engaged in a similar type of lending system? Why would that be? Why would certain banks have an entirely different system of lending money than others, right? It's not. It's all the same. It's all endless amounts of fiat money that they loan out, and they hope that people don't go and take their money out at once. But here's another thing. The other side of this coin is people are taking their money out anyways, even if they're not panicking. Why? Because they're living paycheck to paycheck. We've seen the savings rate drop and drop and drop now for about 12 months, actually a little more than 12 months. Declining savings rate, except it did bump up a little bit in March. And I think that was because of tax returns. But then we are going to see it resume downwards again. We're talking about the amount of money people have in their savings accounts, in their checking accounts. So even without a panic bank run, so to speak, the amounts people are keeping in the bank, it's dropping and dropping and dropping, except for the minor bump that we saw a couple months ago. So we're definitely not out of the woods, in my opinion. So strategize, invest accordingly, according to what you think is going to be the outcome of this, right? Now let's put this into perspective. And just our last report, we talked about how there's been 70 retail bankruptcies year to date, and how already for retail bankruptcies, 2023 is the third worst year in history with the largest number of bankruptcies, only being eclipsed by 2009, just after the financial crisis, and 2020 with the health crisis and the shutdowns, wiping out so many businesses, hundreds of big companies, wiped out, filing bankruptcy. So we're on pace this year to be the worst year for retail bankruptcies. The retail apocalypse, as some may call it, is continuing this year. But not only that, the banking crisis now, with what we've seen, is already worse than 2008, right? The billions upon billions of dollars in these banks actually equal a lot more than what we saw the entire year of 2008, right? So we've already eclipsed the financial crisis, but yet we're supposed to believe that everything is safe and sound. If everything was safe and sound, then why are we calling a lower dollar amount or a lesser dollar amount than 2008? Why are we calling that a financial crisis, but we're not calling what's happening right now a financial crisis? Well, that's what I've been calling it. But of course, the talking heads, the business news people, they don't want to put that out there. They don't want to say, they don't want to admit that we're in a financial crisis, because that would actually have a lot of people realize what's happening and make the bank runs happen even faster, right? So it should be pretty simple and obvious, why they're not putting those words out there. I think you know it, I know it, we all know it. So we just have to, know what to expect here, know what's happening. I wouldn't be making any large purchases right now. I live in California. Now, if you're buying a home in the Midwest, may not be that big of a deal because prices didn't run up in a lot of the Midwest states like they did in some of the coastal states or some of the bigger cities. I expect bigger cities to become a lot more dangerous with what's happening right now. There's a lot of people out there suffering under some major financial hardships. And usually when that happens, you see a lot more people angry, a lot more mobs, and it usually starts in the cities. And that's where I wouldn't want to be right now. And I wouldn't be buying a home in a bigger city right now. Even if I was in, let's say, Ohio, I wouldn't want to be buying a home right now in a bigger metropolitan city, metropolitan area. Next, let's talk about bond yields. We did see bond yields rise today. That's another sign that things are not going so smoothly behind the scenes. We've got the 10-year yield at 3.57 right now. That means higher mortgage rates. And when you start seeing bond yields rise continuously or for many days in a row, that's a sign of further distress. And it's a sign that investors are not so willing to grab up this debt, basically. We've got gold right now at $19.90 and 80 cents. We've got silver at $25.23. Both of those items there are still very undervalued, in my opinion. With all the money that's been created, the numbers should be much higher. Silver should be in the triple digits, and it will, because after the failure of the current financial sector, and after the failure of the next system that they're going to try to bring in, which is going to be another fiat system, after that fails, and I don't think that one's going to last very long. I think that's going to be 1 or 2 years maximum. Then I think we're going back to sound money. Look around the world, other countries are either looking at or are integrating sound money. We've talked about them here many times on this channel. Ultimately, we're going back to sound money, but we just have to get through this monetary madness that we're headed into in the next couple of years here. In 2023, we're going to see a lot more craziness unfold. All right, so keep stacking, folks. We're going to wrap it up here and leave this one here right now. We'll be back tomorrow with another important update. I've got some news actually I wanted to get into, but it's on a little bit of a different topic, so we're going to save that for a separate video. Please come back, like, subscribe if you like what we talk about. Keep this channel alive. Thank you very much, everybody. Bye for now.